looking at Fisker stock is doing pretty well overall. Now, in this video, I'm going to cover in terms of the movement indication of it's still going to continue up to the upside or not, like showing the indications. In terms of the resistance levels, what levels does it need to pass? And more specifically, what level I think it needs to pass, because if you saw my last video or second last video, I showed that the stock is in extremely shorted territory. It's shorted above 20%. So I think if it passes this level, I'm not saying chase a short squeeze or anything, but I think it could start jumping up even higher because potentially shorts will cover at this price point. And then I'm going to cover the down, like the support levels. If it does go down, what levels can it rely on as a support? And I'm going to cover the short positions in general as well. Now it closed at $15.92 as of June 4th, 2021. And pre-market's looking decent overall, I guess around the same ballpark, so not too bad. And quick disclaimer before I continue, like always, I'm not a financial advisor, I'm not a professional. Everything I do share with you is just my opinion, not advice, so please do your own due diligence and research before buying and selling. Now, if we look at the graph right here, like I've shown in the past, downward trend resistance line, once we break it, I was anticipating a decent run up. This was okay, but not what I was expecting, just because in the past, there's always been a decent, like a pretty good run up overall. So here's two examples, there's more examples as well, but here's one where it broke it, went up to the upside. Here's another one where it broke it and it consolidated and then went up to the upside. So here, it was trying to like at least go up, didn't consolidate, didn't, got knocked down. I think this is in relation where it was getting shorted, extremely shorted. It was getting shorted even more than what I've covered in the last video, so I'll cover that in the next video as well. So in terms of, in case if you're new to investing, by the way, too, shorting means where whoever is shorting it borrows a stock at the moment, let's say right here, sells it at this price point in anticipation to buy it lower in the future date to pocket the difference. So yes, they could have covered during this point right here, which they most likely did, but it's because it's extremely shorted. If this was coverage, it would run up even higher in my opinion. So there's that. Now the level you need to pass in terms of upward trend resistance, there's more resistance that I'm going to mention, more resistance than I'm going to mention, but I want to cover the most important one. That's basically it. So first, right now, are concerned about the $16 price point, then $16.20 to $16.30 price point, then $16.40 to $16.50. These are horizontal resistance levels that I'm covering, by the way. So just to show, I'm going to show the most important one right now, because there is resistance at like $17.30, $17.70 as well, I believe. But the main focus is this right here. So this is roughly around the almost mid-low $18 price point, so around $18.30 to $18.50, maybe a little bit lower than that sometimes, but when I measured it was around $18.30, $18.50, more specifically $18.30, is right about here. So horizontal resistance is when it goes up, gets knocked down, goes up, gets knocked down, and there was another one right here, I believe right here, goes up and goes knocked down. So passing this, in my opinion, I believe this would trigger the algorithms, for example, for the hedge funds and all stuff. I'm not saying they're the only ones shorting, but more specifically who have massive amounts of money, which will cause more dramatic movements, would be hedge funds, and they use algorithms for the most part to determine to enter and exit. And around the 1830, 1850, passing that, I would say more safer to pass 1850 would trigger that. And just to visually show, it is not a guarantee that would happen. What could happen is you could go up to it either low $18 price point or 1830, 1850, and get knocked down, and then probably potentially continue on the downside. I don't think that's going to happen unless more short positions enter and short the stock even more, but that is a possibility, and you need to be aware of that. Now, if it does pass 1850 and you want to be more sure, technically take less of a risk, and I think that would be fine, because what could happen is it could be a false breakout, and if it happens pretty dramatically, it could even potentially pass $19 a little bit, and then if it comes down quick, like, so for just to visually show as well, one more thing too, if it goes up like this, the problem is that's a little bit tricky because it's just a quick spike up where it was just potentially a false breakout, and that's not what you want. What you want is like technically just this, a slow continuous upside, and then once you pass it, then you could have like a massive spike up, like not necessarily like that, but essentially, hopefully you could depict what I'm saying. So there's that. So you want a gradual growth like this, even though this is technically pretty quick. This is not gradual. It basically almost doubled within a short period of time from May 11th to June 7th. So pretty massive run up, pretty quick. So passing $19 would be a good indication, as long as it's not relatively a quick spike up and you're in good shape. Could be quick, but you want to be sure, so at least somewhat this quick overall. Now, in terms of it going down and the support levels you could rely on, there's a chance that first it could consolidate around this level that we saw. This was for 3 months, and it consolidated between around 1450 to 1650 for the most part. And you could see if it were to come down, so it could consolidate around that level. Hopefully, if it does consolidate, it continues to the upside like we saw here, and then we'd be good shape. The only thing is though, if it does come down, the support level you could rely on is around the 1450 like I mentioned. And you can see right here as horizontal support, where when it came down, it bounced off it, especially here. This was like the cleanest one. There's another one here, a couple ones here, and so on and so forth. Then after that, 1450, yes, there is more support levels in between, by the way. I'm just mentioning the major ones. Like again, the resistance levels, there are additional ones around the same $17 price point. But the most important ones is, like I stated, 1450 for support right here. As that was resistance, but this is for support. The next level, yes, there is support between 1450 and 1350, but 1350 is pretty major support level right here. So you can see as well here horizontally, you had a touch point right here, touch point right here, touch point right here. So just to more visually show, came down, bounced off 1350, went up to the upside. These are not exact price points. Like another one right here, if you can see the tick right here, 1350 as well. It could hit like 1347, 1340. It doesn't have to be clean 1350 to act as support and bounce up to the upside. So around that ballpark, plus or minus a few cents. In terms of dollars, plus or minus a couple dollars, I guess. But not necessarily that dramatic though, because this is not moving necessarily in terms of dollars, massive dollars. So it's more like a few cents, like 10, 20, 30 cents. So hopefully you found that helpful. Oh, actually wait, there's a couple more things too. Sorry about that. So upward trend support line, still looking intact. So looking like a V-shape, bounce and recovery and all that stuff. So that's good. And then also in terms of movement, so the indications. In terms of the 1 month, it's not necessarily looking great because it's still the MACD line right now. So it is above all 3 moving averages. That's a great sign, because if it comes down, it could bounce off of as support. Not guaranteed, but still possible. Just to visually show, let's just say it came down here and it could bounce off the $15.20, $15.30 price point and continue to the upside. That is a potential. Also, the MACD line is in the negative. This indicates if it's a bearish or bullish movement. This is in terms of 1 month, so the 1 month movement. And right now it's negative, so it's bearish, not optimistic, but it is not necessarily curving up right now at the moment, but it is like getting smaller and potentially could curve up to the positive and be bullish and optimistic. So you can see with the indication of the red bars, they're becoming a lighter shade red, plus they're becoming smaller. So all good signs of potentially curving up to the upside. Now, in terms of the 3 month chart, I believe it's the same. Yeah, same thing, but it's not slowing down yet. So there might be a little bit turbulence, more of an indication of the consolidation. With the 1 year chart, it's looking great, no slowdown. So it's a bit of, so in terms of those previous movements, those were short term. This is more of a longer term. So for the 1 year, it's looking good, continuous run up. And in terms of 5 year chart, I believe it's just about to get started. Yeah, okay. So in terms of 5 year, same indications as 1 month. So in terms of, so this is longer. The 5 year chart takes longer to move. So right now it's still bearish. So it means there will be more potential in between days of down days. Even when it's positive, doesn't mean that it's always going to be green days. There will be also red days, but it'll be less likely within, like there'll be more green days than red days. That's basically what it is. So the movement overall. So right now we'll still see a good amount of red days, but even though it's negative and bearish right now at the moment, it's trying to curve up to the positive. Is it guaranteed it'll cross over to the positive? No, it could get knocked down and continue to the negative. If I could see, I can't see an example here, but if you've seen my other videos for maybe other stock videos, you can see where it'll probably recurve down and then continue to the downside and be negative if that's the case. But I don't think that's the case unless it gets extremely shorted even more, which would be pretty risky for whoever's shorting, because then you have more people trying to get into the profits of shorting, and you, again, like I said, domino effect and all that stuff. But bars getting lighter shade of red, plus smaller, plus curving up to the upside. This indicates to me once it passes $19, we could see a good run up, decent run up overall. Again, I'm not saying chase a short squeeze or anything, but there's a chance. The only reason I'm saying don't chase a short squeeze as well too is you need a lot of backing. You need a volume to get in to back a short squeeze. It's not like buying 1,000 shares will take care of it. That's the issue. The only way to take care of a short squeeze in a way is either with volume or earnings, and earnings have to crush it. And even then, if whoever's shorting it decides to bring in more volume in terms of shorting, could make it look like the earnings wasn't that great, and that's what could happen sometimes too as well. So you got to be careful. That's why I'm saying don't chase a short squeeze if you don't have, like, for example, volumes and all that stuff. So that's the thing. So hopefully you found the video helpful. Hope you liked it. If you did, consider dropping a like. It does help with the channel, so thank you so much for that. I appreciate it. If you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And if you like videos like this or other stock videos or other financial videos, consider subscribing so you'll be notified when I do upload those videos. Thanks again. Appreciate it. I'll see you in the next video. Peace.